You could be paying more for car insurance and not even know it. We're talking no tickets, no accidents, and you're still paying more. How is that possible? We expose the practice some are calling rate discrimination.
The next time you hit the road, know this: your history behind the steering wheel may not be what's driving up the cost of your insurance.
If you simply don't have a 4-year college degree and a high-paying job, you're just not eligible for the preferred company.
Eric Poe is blowing the whistle.
It's a secret that nobody in my industry wants to divulge to the common person because they understand that none of these proxies ever work in favor of people that have less incomes.
Poe's been fighting for years to level the playing field, lobbying lawmakers at the state and federal level to change how insurance companies set rates.
Don't think that the reason why your rate is just higher is because you're a bad driver or this insurance company simply charges more than other insurance companies. You could be blatantly discriminated against because the proxy likelihood of you not making a lot of money costs you 40% higher rates than the other driver who goes on the same website.
Poe's also the chief operating officer of Cure Auto Insurance, a nonprofit competitor to the big insurance companies. Cure doesn't use education or occupation to set rates.
Would someone look at you and go, well, you're in the insurance industry. Does this benefit you in some way, the devil's advocate side?
It benefits me in one way, that I'm able to compete for risks in drivers on the road without having to go after against people that don't have high-paying jobs and don't have good credit scores.
We wanted to see this practice for ourselves, so we pulled up several insurance company websites.
Let's go to geico.com and get a rate quote.
To get car insurance quotes.
Let's get a quote for Lisa Williams.
Over and over, we entered the same data. A 43-year-old woman, the same make and model vehicle.
She drives a 2012 Honda.
Same address and a clean driving history. We made her a waitress.
All right, they want to know her education. She's going to have a high school degree.
And we got a quote.
$148.19 a month.
And then we kept all of that information the same. But this time we turned that waitress into a doctor with a college degree.
Let's give her a DUI.
A few minutes later,
it went down, $129.86. The doctor with the DUI has a lower insurance quote than the waitress with a perfect driving record.
We did this multiple times on the Geico and Progressive insurance sites, and the rate quote always dropped for the DUI doctor.
Does it take a rocket scientist to understand who's being discriminated against? I don't think it does.
When we asked both Geico and Progressive about this practice, both companies referred us to the American Property Casualty Insurance Association, an industry trade group for nearly 1,000 insurance companies.
Why does your job title and your education matter in an insurance rate quote?
There's no one way by which the companies do business, and that's something that's often lost.
Dave Snyder is the association's vice president. He says insurance companies use many factors to calculate risk and your rate.
All these factors are used for one simple reason, that they help improve risk assessment so that the companies can best match price to risk. An insurance company can't use a rating factor unless we can prove to the state regulators that that relates to risk.
But some states are making changes. New York banned the use of education and occupation as factors in setting auto rates, calling it unfairly discriminatory and penalizing drivers without college degrees who work in low-wage jobs. California is currently considering similar, stiffer rules.
Is this a level of discrimination?
Oh, absolutely. It's a subtle, way of discriminating.
Congresswoman Bonnie Watson-Coleman of New Jersey has taken this issue to the federal level, introducing the PAID Act, which would prohibit the use of driver's education and occupation to calculate your rate.
Shouldn't the driving record matter?
That is what should matter. For working families who need to get from one job to another or need to go pick their kids up from school in between their jobs or need to go get their groceries, they're the ones that are suffering. They're the ones that are paying higher insurance rates. than those individuals that might have a blemished record.
Dave Snyder argues a federal ban would only increase insurance rates for everyone. It remains to be seen if that's actually happened in a state like New York, which already has this ban in place. But he adds consumers have the most power here.
It is highly competitive. If a consumer feels for one reason or another that they are not getting the kind of price that they feel is good for them, they have the ability to shop around.
Not all insurance companies ask for your occupation and education level. We found that Allstate and State Farm do not. The PAID Act currently sits in the Financial Services Committee, awaiting action. For Investigate TV, I'm Rachel DePompa.